All right. Good morning. Good morning, everybody. So we got Powell in Congress today and tomorrow. Operation Don't Rock the Boat. He's going to try to talk out of both sides of his mouth without saying anything. And they're going to try to get him in gotcha moments all day. A lot of times, this is just a circus where they want him to, comment on anything that fits their agenda. I've seen them ask him about, climate change and global warming and SpaceX going to the wherever. It's just a lot of silliness. And that's when they didn't have a unified agenda, which they do now. They're going to want him to talk about tariffs and its impact. They're going to want him to say he can't be fired so that they can, try to push the president around. It's going to be a circus. So if they rile him up and he gets to, winging answers back, which I don't see coming, he tends to dance really well to the puppet masters, but he can inadvertently say something that rocks the market. We've seen throughout history that these congressional meetings can cause surprises when the current Fed happens to say something that hasn't been publicly announced yet, or there's just so many things that can go wrong, right? So today, while he's talking, I would expect the market to chop around sideways, holding the line with spikes and drops to little gotcha moments as they come through. The main thing, though, that he's going to be trying to do is to make it through without really moving the market. And anything that he says is very likely going to be geared with an eye towards how will my answer affect the market. We'll see. He's done, reasonably well over the years of avoiding the worst landmines. But he knows exactly what to say to make the market move in a direction he wants to move it. So approach with caution, and it's not just today, it's tomorrow too. After we're done with him, we still got other events for the day too. So looking at what's going on around the world, the Russell's down the most, more than 0.5%. Hong Kong up a little more than a quarter. The Dow down a quarter, S&P a quarter, NASDAQ closer to a half. So, it's a little heavy, but it's not really bad. And we're just looking for the markets to hold the line, get through this mess. And then, of course, we've got the EU. They've been sort of trying to show that they're not going to be bullied and pushed around at the same time that they're getting bullied and pushed around. They're going to close at 11:30, and it's likely that if they were weighing on us through the morning, that having them close will help. Gold made another leg up. Dollar's still kind of holding steady. So it's a bit of a hurry up and wait situation right now. But we can see what's going on coming out of the Bank of England. And we've got European Central Bank speaker later in the morning too. So, it's not looking like it's going to clean up anytime soon. Should be a pretty bumpy ride. We got the put wall rolled up, and we don't have the AM edition yet. But I would suspect when we get it that it will address this put wall and call it something like a false put wall. We've seen this happen before. They just have the algo spot where everything is at. And in the short term, we can see a momentary blip where the put wall comes up a level and then gets dropped back down again. And usually when that happens, they'll address it in the spot gamma notes and talk about how, yeah, technically that is the put wall, but there's a stronger structural level at a different spot. And that quote different spot is likely where it came from. And if that's true, then by tomorrow we should see it, back down in that lower area. Otherwise, we've got zero gamma and volatility trigger still holding steady with us, and the call wall 62.25 area. Overnight volume around 53, in line with what we saw earlier. It's not really much of a surprise. And if you look at Friday where we had 39, then we're certainly doing better than that. It has been declining. We can see we had 100, 72, 64, 56, and then 180, another 100. So we've been getting more than this. Since Friday, though, we dropped down into the 30s, and then we've been maintaining in the 50s. It seems a little light only because it had been getting kind of heavy in the overnight trading. Looking at the ADRs, we're closer to the lower edge, of course, because we've gone down a bit since we've opened, but we're holding steady and we haven't got there yet. Generally speaking, if we're closer to one than the other, then the baseline bet is that we'll go down and hit it. But we've had opportunities to go down there all night and we still haven't done it. We would have to get through 60.50 to get there, which is another options level. And it looks like the market's just waiting on some flow, some volume to push it. So we're looking for the market's response. We're still above the weekly pivot. That gives us a continued bullish bias. Today's floor pivot is lower than yesterday's. That's bearish, but we opened above it and that's bullish. So those two things cancel each other out. We don't have an MDP because we've already come down and hit the floor pivot. It's a wide channel, which implies if we try to break out that it won't stick. Now, if we think about that concept of if we try to break out, it won't stick. I've had people ask me about this when I've mentioned it before. What are we talking about breaking out of? And that would be yesterday's range, all of this. So that wide channel implies that if we try to break out of yesterday's range, that it won't stick and we'll come back in again. Breaking out of the top side isn't too far-fetched. It's easy to imagine that we can do that because we're closer to the upper edge than we are the lower edge. To break out of the bottom, then we'd have to get all the way down here to 60.11 cog line and then manage to get out beyond that and continue the run, which that wide channel says we wouldn't. Very likely we would not continue to run. We'd just come back inside the range again. So it's not like that channel is, providing some revelation that we hadn't already thought of. It would take a lot of work to get a breakout of yesterday's range at this point, at least from the downside. So looking at last week's profile, we're still above the point of control, and the profile for this week is over our head at that 60.86 level. 6,100, we managed to get through that last week, and we were holding there, getting a little bit of reciprocation trade on each side before we broke down into that close on Friday. But I'd say 6,100 is still the level we have to fight against, not that big spike. And probably want to track down like a liquidity gap where the start of this dump was, whether it's 6,100 or 6,111, maybe 6092 cog line, one of those. For the week, we've got a lot of the profile up against the upper edge, and this is forming a little bit of a capital P shape profile, right? When we look at these profiles, you got the D distribution, lowercase b, capital P. All right, the point of control now on the TPO and the volume profile are about lined up, 6092 cog line. We won't see this move likely unless we distribute more around this 6075 area. It's possible that if we get there and build it out a little more, then we could bring the point of control down a little bit. But that's really the only movement that we're looking at, and it's still within the zone anyways. This is a highly concentrated level. If we think about the fact that this is a 10-day profile and it spans from 5,900 to 6,150, they're really wide profile. And we look at this is the value area, right? So value area high, VAH, VAL down here on the lower one. This is where 70% of all of the volume took place, or if we're looking at the TPO and its value area, that's 70% of where all the trades took place. And it's within a 70-point range. So out of this entire thing, 70% of all the volume happened in that little bitty area. So we could see some fluctuations here with the point of control moving up or moving down, you know, from 6089 to 6080, because we're just distributing more and more trades here, more liquidity here. At some point, we're going to leave this range. But one, we continue to chop sideways, and this is what we call a correction, right? So you got a correction in time or a correction in price. This is a correction in time. The longer we stay in this range building it out, the more and more we're building up positions here, and the risk gets distributed above and below. So the longer we're here, the more the structure builds out here. And it will take more and more effort to get through it. It's going to take a big push. So something really negative to take us to the downside, or something really positive to take us to the upside. As long as we're in this, it's going to continue to be choppy for the rest of the market too. So we got a new VPOC built yesterday. That'll be sitting over our head. So 60.88 or 60.89. Yeah, maybe 60.89. It's not going to matter, right? You don't have to nerd out on it. It wants to hit the half. Any push made to the upside is going to have to get through that. It just adds to it, the point of control that we've got to fight against. Now, we can hit it on news, right? If you think about the candles we're going to get today, they're very likely going to look a lot like a CPI or non-farm payrolls, big spike up or big drops down. And then, of course, since it's a liquidity gap, attempts to run it back where we came from, close the gap, do it again. We could see a morning where we don't get those big moves. You know, that's absolutely possible. Don't assume that it has to be big violence. There could just be boring sideways price with no real gotchas at all. Looking at things within the week, everything's just moving as it's supposed to. We haven't really gone anywhere. Holding the line. This is the range for the entire week. We're still inside of it. You know, it is nice because the last 2 Mondays, we had broke out of the weekly expected move on Monday. That was the entire week's move, plus some, done in the overnight on both of those. And then whether or not we were able to recover, you know. So this week's starting out pretty good. Still 0.75% above the 10-week, still correcting, just going sideways. If we're less than 1% from the 10-week, it'll act like gravity and try to pull us back to it again. So we can chop above it, below it. I wouldn't look for it to act as a support or resistance. It's just a level that we're crossing around with. We got to get away from it. It's going to take something to drive us through and get us there. And we are at the 10-day, 0.02. So, I mean, we're on it. If we were to zoom in, there's a tiny little nubby there. Same thing, if we're this close to the 10, it'll act like a magnet. We'll just cross back and forth above it, below it. It's not supportive. I wouldn't look for it to offer anything. We need to get away from it. And it's likely going to take some big news to do that. So this Powell in Congress always messes with the broader market too. Stock pickers won't have a problem today. There'll be things running that will completely ignore whatever's going on the Hill, and they'll react based on whatever news they had, right? Those kind of plays are always there. So you can try to look at the sectors that are up this morning and try to play it as a theme, you know, with growth versus value and risk on, risk off sectors. But I think your best bet would be just focusing on individual things that are moving not because of their sector or their industry, but simply because as a binary event, they had some sort of news that sparked the stock movement. If you're trading futures, maybe take a look at gold or oil today, at least through the morning session. If Powell's gonna, hold the ES and the NASDAQ hostage half the day, we'll find something that's actually got a chance to move. So China's down, emerging markets, which is also China, gold miners, bonds, chips, Mag 7, all down. That's not what we want to see if we're looking for a breakout rally day. And things that are up, energy and Bitcoin and pot stocks. Don't want to rally based on pot stocks and crude. So it's just going to be one of those mornings. And there was a question about an options price this morning. Keep in mind that while these prices are moving in the pre-market, the options market runs from 9:30 to 4, right? Open market hours. So you can see movement in here pre-market, and I'm on an equity, I'm not on the futures. You'll see prices move. Just keep in mind they're not accurate, or you don't want to trust them because it's still pre-market. The market isn't open. That's one piece. Then there's the idea that, well, if I buy something, say a call or a put, doesn't matter. If I buy something for 35 cents and I've held it now for 2 days and it's in the pre-market and my loss is showing 42 cents, well, how can I have a loss of 42 cents when this thing that I paid for can't lose more than 35 cents? The way that can happen is it's all about the bid ask, right? This contract isn't smart. It doesn't know anything. And when I told it that I wanted to buy this, it tried to split the mid, right? So I've got the natural price, the mid price. Well, if it's an out of the money option and it's an illiquid product, then any Joe Schmo can put whatever number they want. And so those people say you have this call here and you bought it for $2 and now it's worth 10 cents. Well, you can put a resting order on there, good till cancel, and you can try to sell it to somebody for $1. It's very likely that nobody's going to buy it, but you can do it. And this thing will read that the split between the bid ask is 5 cents and $1, even though it's an unrealistic number, it'll still do it. So if you're looking at your options trade that you bought and it's in the pre-market, or even in the regular trading hours, if it's an illiquid turd and it's showing a price that is not possible, like you bought it for 25 cents and it says that your loss now is 42 cents, that's not possible. It's just because that bid ask, if somebody has one of those options, they can put in whatever price they want. It may not fill, but they don't care. And then that'll adjust the machine when it's looking for the split between the bid and the ask. That's why. The good thing is the broker has built-in inherent protections. So like on Tasty, if that happens and you try to close it for a loss of 42 because you don't know any better, Tasty will not fill the order, right? The max loss is say 30, then you can't fill it for a minus 42. It's very likely going to be boring and exciting all at once today. So be careful, watch the clock. I'll see y'all tomorrow.